Hello again, this is Andrew Westhof, owner and senior loan officer of Homes Mortgage Lending, and this is your mortgage interest rate update for July 21, 2022. If you're in the market for a home purchase and want to keep an eye out on what interest rates are doing, please subscribe and follow my channel as I'll be doing these weekly or bi-weekly. So without further ado, interest rates this week haven't moved much at all. Interest rates are about where they were last week. So at Homes Mortgage Lending, I priced out a 30-year fixed conventional with 20% down, assuming a $375,000 purchase price, 740 credit score, one unit single primary residence on a 30-day interest rate lock. So that rate was 5.71% today, APR 5.597%. So I'll show you the detail of the worksheet on that here shortly. So with my company, with Homes Mortgage Lending being a brokerage, looking at different lenders, a lot of the wholesale lenders have lowered their margin, which is great for buyers, meaning that their rates have come down a little bit. So last week we were at 5.67%. Now we're at 5.471%. So not a huge drop, but a little drop, which is always a good thing. So here are the actual numbers for Freddie Mac survey, and they survey multiple lenders, and they're showing the rates. And again, these are with points. So my rates are actually significantly lower than this because there's no points associated with that 5.471 that I just mentioned. But these rates are actually higher than last week a little bit on average. So both the 30-year and the 15-year are up a little bit on average. Again, with my company, they're down a little bit, but nothing to write home about. And then the 5-year ARM is actually down a little bit nationwide with the Freddie Mac survey. So here's the price out of that $375,000 purchase. So $75,000 is the down payment. That's 20%. Interest rate 5.471 with an APR at 5.97. Again, this is 30-year conventional. And we have our standard closing costs, estimated prepaids, assuming that an escrow is being set up. So a total out-of-pocket estimation of $91,489, and then total payment with taxes and homeowners insurance of $25,447. This is assuming a little over $1,000 a year or $85 a month on the homeowners insurance. And then I priced out the property taxes based on a home in Ann Arbor, Michigan, because that's where I do most of my business. Would be about $765 per month. And I will put in the show notes, just like I did last week, the site where you can search for, or you can do a calculation on what the property taxes will be in your area. Property taxes are goofy because they're likely a lot lower when you buy the home, but they're going to go up shortly after when the taxes are reassessed. So what you want to do to plan for your property taxes is assume a state equalized value of about 48% of the home purchase, and use that to plug into the website I'll send you. It's the state of Michigan's website that you can put the county, school district, and that state equalized value, and it will spit out a pretty good yearly estimate for what the property taxes will be. So what this looks like for the principal and interest, $1,697.91 on a $300,000 loan amount. So that breaks down to be $565.97 per $100,000 you borrow, or $56.60 per $10,000 that you're borrowing. So if you're not buying a house for $375 with 20% down, you can do the math at home. If you're putting less than 20% down or doing a different loan program, obviously the math's going to be a little different because you might have mortgage insurance. The interest rate might be a little bit different on a different type of loan program like FHA or VA or USDA. So if you do want to get another opinion, it's always good to talk to multiple mortgage lenders when you're purchasing a home to make sure you're getting the best deal for you and your family. My contact information is in the show notes. I can do loans anywhere in the state of Michigan and do loans all over the state of Michigan, so I would certainly be happy to help from that front as well. So hopefully this has been helpful. If you do have any questions, please feel free to post them in the video comments. And again, subscribe and follow. I'll be doing another one of these next week for sure, because next week, July 26th and 7th is when the Fed meets, which is Tuesday and Wednesday of next week, I believe. So next Thursday, the market will have reacted to whatever the Fed does. which is kind of the big news. We don't expect much movement before then. If you have an offer accepted on a home and you don't want to gamble, it's probably a good idea to get your interest rate locked in early next week, Monday or sooner, before the Fed meets and before they announce what they're going to raise the rate to. Rates could come down after the Fed meets. We expect that the rates are going to raise 0.75%, but they could raise them 1%. So if they raise them 0.75, we already have that priced into the market, and that will actually cause rates to probably lower a little bit. But if they raise them the full 1%, some of that risk is priced in, but not all of it. So there's a good chance that rates are they're almost certainly going to go up if the Fed raises the interest-free rate that they charge banks 1% instead of 0.75. So again, I hope this was helpful, and I will see you next week.